All right, guys. Good morning, everyone. Give me a little shout out here. Let's see who is in here and where you are from. Coffee and Stocks with Paul. And someone let me know if you can hear me and see me okay. And most importantly, see my screen and hear me. Looks like I've got my camera black. Hold on for a second. There you go. All right, guys. What's going on? We have a great turnout as usual. Thank you for joining me this Saturday morning. Coffee and Stocks with Paul. I've got my Caribou coffee right here. Spent 15 years in Minnesota. Love Caribou coffee. It's a Starbucks of Minnesota, and it's way better than Starbucks. Let's see who's in here. Let's give some shout outs. Ed, what's going on from Calgary? We've got Andrew from Toronto. We always have a good Canadian turnout here. Will from Colorado. Andrew, what's going on? Ed, what's going on? Dan from Calgary. Wow, first three people are from Canada. Ed, what's going on? Michael, San Antonio, Texas. Brian from Vancouver. Jose from Chicago. Kenneth from Seattle. There's so many people in here. I don't think I can shout out everyone. Anant from Austin. What's going on? We've got Rich here. Ubby, what's going on, Ubby? I know Ubby well. Kevin, what's going on? Bien from Laguna Beach, not too far from me, probably about 45 minutes away. John from Denver. We've got Sal from Long Island. Andrew says maybe rename it the Swing Cafe. All right. Jame, I know Jame well, from Barcelona, Spain. What time is it over there, Jame? I'm going to guess it's in the evening, around 5 or 6 o'clock. Akshay, what's going on? Margaret from Kuwait. We've got Rolando from South Carolina. Oklahoma, we've got, I hope I'm saying your name right. Kursden, and Kursden is drinking Black Rifle coffee. I'm going to have to try to check that out. Brian from Pittsburgh, what's going on? Scott from Ohio. Paul from Venezuela. We've got a good international turnout here. Anthony from Delaware. Yassine from Orlando. All right, guys. Great turnout this morning. Can't shout out everyone here, but thank you for joining me this morning. We do these stocks and coffees every 2 weeks, every other week. And the weeks that I don't do these, I put out a market analysis or weekly swing report. So make sure to check those out as well. I'm going to do the usual today. We're going to talk about the market itself. You know, we use a top-down approach. Bulls on Wall Street, swing trading, this is how I trade. Before I do anything related to trading in stocks, we want to see what the market's doing. That gives us a good idea of how we should be trading, where we should be trading, how aggressive, conservative we should be. So we're going to do that. Then we're going to go into 5 areas that I think are really important right now. We've already talked about some of these, but we're going to talk about them again. And there's some new things that are starting to move, so we should pay attention to those as well. And then I will go over a few current positions we are in over at Bulls on Wall Street. All right, looks like Black Rifle must be a good coffee because Greg also says he loves Black Rifle. So I definitely will check that out. All right, guys, let's start with what's going on with the market. When we analyze what we call the market, we're basically talking about the S&P 500, the Qs, and even IWM, which is more focused on small caps. So what are we going to do? We're going to do very simple. Just draw a line. What is the trend in the market? And it's interesting here, even though the market has been shaky, we know through May we had some dips that looked like maybe potentially leading to a deeper pullback, and there were some concerns in the market. You can see here we tested the 50-day moving average, but as has been happening since the pandemic low, every one of these, semi-scary, semi-concerning pullbacks has led to a big run, and that could be what we're seeing again, as we see here. So if we're thinking about trend, uptrend, very simple. Just draw the line. We're in an uptrend. Now, if we look at the Qs, very similar here. Lagging a little bit in the sense that SPY is right up near all-time highs, whereas the Qs, which we know is more tech heavy, they're not all techs, but of the 100 stocks in Qs, it is heavily weighted towards tech. And that is lagging a little bit here. You can see here, all-time high was in April, and we're a little bit away from that, but we do see some healthy action here. And again, we are seeing higher lows after the dips. So dip here, higher low, and now we are seeing another higher low and what potentially could be a higher high here. So we don't want to stall right here. If we start to stall right here and pull back, that puts in a lower high, which would be a little concerning. But that hasn't happened yet. So until it happens, doesn't matter. Right now, we are on trend. And again, uptrend. Maybe not as strong as an uptrend as SPY, but an uptrend nonetheless. Now, let's look at IWM. So we have SPY, the biggest and the best 500 stocks. We have the Qs, more tech heavy. And our economy runs more on tech, so its Qs are more and more important than ever. And now IWM, which is more small caps, and we want small caps to be healthy in a good booming market. Small caps are moving. So a different overall uptrend if we go back to, say, the pandemic low last year, but more near term, actually range bound. So it's not uptrend, and uptrend. I would say right now, at least shorter term, uptrend, and then we have IWM, which is range bound. So that's our first kind of concern with the market, and also helps us know where we should be trading. We should be more aggressively trading, some of the mid caps, some of the big techs, those types of things, not necessarily small caps, but near term, we've actually seen some improvement. So still in this range bound action, but we're getting a little concerned here because while SPY was up here, say, IWM was below its 50-day moving average and stalling, but now has broke through. And actually last week, I don't remember what the numbers are, but just looking at the charts, it looks like IWM at least kept pace with SPY and maybe even outperformed SPY. So that's good near term, what we want to be seeing. So essentially we have uptrends or range bound action, which, and we have volatile action as well. If we look back at SPY, as we were saying, essentially here through May, we did nothing. So, and this is common in May. May, we don't tend to get good trends. You can see the numbers here I've posted from last time. May, June, July seasonality. 55% of Mays are positive and they don't tend to trend. 35% of Junes, and this is going back over 50 years, 35% of Junes are positive. So June tends to be a weak month, and that's something we should know coming out of this Memorial Day weekend, that as June begins, June tends to be a weak month. Another seasonality, this is taking the odds. But if we have a 35% chance of it being a positive month, that means 35% of the time it is positive. So it's not a given that it's going to be weak, but it tends to be weak. Now, last year was different. We were coming out of the pandemic low, and actually the summer was very strong, and we got some good trends. So it doesn't mean it's not a given that June is going to be weak, but we should know the odds are that June tends not to be good. And then July tends to be very strong. We have a new earnings season coming out in July. We've had 2 months of kind of either volatile or range-bound action, and then we get the strong July. So we should know that this is what seasonality is telling us, but not every year does it play out like this. So again, SPY was volatile in May, but essentially ended up where it started. So no real gains. Qs actually ended up weaker, and IWM, we are seeing improvement now. And actually, maybe if we go to May 1st here, I guess about the same spot as well. So really nothing happened in May. And now we'll see what happens in June. Now let's look at market breadth. A couple of things I like to do, you guys know this who follow me quite a bit here, is we're always comparing the indexes to the equal weighted ETFs. So if we look at SPY, we know SPY is supposedly the biggest and the best, 500 stocks, right? And it's not equally weighted. Apple, 3%, around 3%. It changes a little bit, but around 3%. If it was equally weighted, every stock would be worth 0.2% to make 100%. So Apple has a big weighting. Top 10 holdings make up about 30% of SPY. So these big guys within SPY have a big impact on what the chart is telling us. So we want to know not only, what is SPY doing, what is the weighting kind of doing, but we want to know, what about broad-based? Is, are the smaller S&P 500 stocks doing well? We want to see the health of the market overall. And what tends to happen before big pullbacks in the market, unless there's a news event that came out that no one was expecting, but a lot of times when we see these big pullbacks, what happens is SPY has looked strong, but if we really look under the hood and pay attention to market breadth, there was a weakening. Stocks were starting to fall off, and we didn't really notice because the big guys were holding up, and the market will continue to narrow, and by the end, everything is falling, even the big guys, and then we get the big pullback. So that's why we want to pay attention to this. So let's look at RSP. We always want to confirm what we're seeing with SPY. RSP is equal weighted ETF. And here, if we pull up the stocks within here, the CRIM, Alta, NVIDIA, XLNX, LVV, LW, all these stocks here are worth exactly the same, as much as Apple is. So here, what are we seeing? We're actually seeing relative strength. So RSP is actually doing a little better than SPY is. So that makes us feel good about this market, at least with relation to the S&P 500. Whereas SPY hit the 50-day moving average and had a pretty deep pullback, RSP didn't even touch the 50-day moving average, and now is a little closer to its all-time high than SPY is. So this is, if the S&P, or if RSP was way down here and SPY was up here, I would be getting concerned that the market is narrowing. So this is a positive related to market breadth. So we have RSP for the Qs, and let's just take a look at the Qs here. We have QQEW, that is the equal weighted ETF for the NASDAQ, and looks very similar to the Qs themselves. Maybe a little better, but as long as it's keeping pace, that's fine. What I don't want to see is it lagging, and it's not lagging. So these are good market breadth indicators. I like to look at within TC2000, T2108. If you don't have TC2000, you can go on some other charting platforms and just look at stocks above certain moving averages. TC2000 uses the 40-day moving average. What you'll notice here is I'd like this to be a little stronger in the sense that this be higher, because SPY is near all-time highs. So that maybe is a little concern, but what I do like is we are seeing a positive divergence in where it made its low. So I would say this is not really giving us a strong positive indication, but not really a weak indication either with relation to T2108. I also like to look at T2100, which is the advanced decline line, and this is very strong, making all-time highs here. So very strong here. So we're seeing a lot of good market breadth indicators. Another thing I like to do is just look at my watch list. Is my watch list strong? Am I seeing a lot of stocks? And those stocks that I'm seeing, are they putting in good patterns? Do they look as good as the indexes do? And we've seen an improvement in that. It had gotten really weak in early May, and now it's starting to show strength. So the point here is, it feels like, even though we have June seasonality coming up, it seems like a pretty good market right now, and things are improving. So, I've been trading very cautiously through May, but now I feel like we could probably get a little more aggressive, which feels odd to say going in June, because June tends to be weak. But we got to go by what the charts are telling us, and the charts are telling us it is pretty strong right now. And if you guys have any questions about what we're talking about, let me know. Bill mentioned that he's seeing a flat top. I think you're talking about, I think you probably mentioned that when I was talking about SPY. And yeah, we're looking for that breakout. We want to see the break to all-time highs. Look at the last time we had a nice break of the all-time highs right here. We had one right here that broke this one, which happened pretty quickly, and then that stalled. But then the next one, we saw a big run here in SPY from March to April. And we're kind of seeing that again, almost the same thing, where we had this all-time high breakout here that stalled. Now we've had a month of consolidation. And now if we break out here, maybe we get this next run here. That's what we're looking for. So yeah, good for pointing that out. Well, Patrick said, are you concerned about a head and shoulders pattern in the Qs? I was concerned. So when we were here and we saw this dip, I was thinking, is this a double top? And, if not break down completely, are we going to test the 200-day moving average, especially when we think about seasonality, how weak May and June tend to be. Some areas within tech, and you should always break down tech because certain areas will do differently. Software was looking really weak. Semiconductors were holding up okay. Communications were holding up okay, but there were areas within tech that were looking really weak. But for now, we're seeing strength and underlying strength, and the charts are starting to improve. If this, what I was talking about before, if we make a lower, right now we can't really predict it other than to say we are seeing good market breadth. But if this does end up being a lower high, which I mentioned before, then I would be concerned. So let's say we stall here, break down below the 50-day moving average, and we're right here. Then not only will I change my approach right now, I might even start initiating some shorts in tech. But that has to happen first. I don't think we have a good confirmation of that yet. And it actually looks like we might be getting back on trend. And that's another thing. Anytime you see potential slides or tops or something like that, like we saw here, if those don't happen and we reverse, weak hands have been shaken out, and that tends to lead to very strong moves to the upside. So if this potential top ends up failing and we get a nice run, it could be very strong. All right. Ravindra mentioned that stochastics are near 80. Stochastics are a rate of change measure. And 80 would indicate that the market is overbought. But overbought markets, if they're strong, can get very overbought. And if we ignore the stochastics and just look at the chart itself, we have consolidated for a while. So I wouldn't be too concerned about the stochastics. If you look at any one of these big runs, stochastics, like look at here, stochastics hung out overbought for a while through this run here. Okay, all right, so that's the market. So now that we've done the market analysis, what is it telling us? It's telling us that maybe we can get a little less cautious. I've been cautious through May. Haven't traded as much as normal or as we were in the beginning of the year. And I think maybe we can get a little more aggressive. I wouldn't get too aggressive because seasonality is still in play and you never know. One thing I didn't mention related to market breadth, we should be thinking about what are the news events that can impact the market. One is quote unquote Biden America. And let me preface this by saying anytime I mention Biden or Trump or anything like that, we don't care about politics, but we need to know what's going on and what's going to impact the chart. So we know with Biden, one is taxes, two is infrastructure. And the big thing right now, because the market seems to be ignoring the tax portion, every once in a while some news comes out and the market might pull back for one day. But overall, it doesn't impact the trend at all. That's a myth that tax talk impacts the market. If you go back historically, it really doesn't. But the infrastructure bill, that is huge. And that some people will tend to ignore these areas like industrial metals, transports, farming, all that kind of stuff. But those things can really trend when they start moving. We've seen that already. And if this infrastructure thing passes, it will. They already are and already have been related to some of this stuff. So let's talk about 5 areas to watch. And number 1 is infrastructure. Sal just mentioned XLB, definitely an ETF you should be paying attention to. Here, materials, building materials here, and you can see how strong this chart is. DBB is base metals. Look how strong this chart is. And these are the 2 areas we really want to be watching. Base metals or industrial metals, industrials, and building materials. Very important, related to infrastructure and transports. The things that are going to be moving these materials become very important. If we remember, let me just go back here for a little history lesson. If we remember, if we take a look at SPY and go back to 2003 to 2008, we remember this as the big real estate boom, right? But what went under the radar is even stronger than real estate was the building materials, was the industrial metal plays. And remember, we're talking about industrial metals, not precious metals. So we're not talking about gold and silver, even though silver has been strong. We're talking about copper, steel, base metals. So that's a lot of what's been happening right now. So we definitely should be paying attention to these areas. And again, you can look at the charts. Whoops. Oh, the weekly here. Let me get back to the daily. We look at the chart here again. Look at how strong base metals have been. This is the pre-pandemic high in 2020. Look at where we are right now. So base metals, not talked about as much, but have been leading the market and have been on fire. And I expect that to continue with the infrastructure bill. And I don't think it's going to be a sell the news type thing either. So we should be looking at infrastructure plays. Let's just randomly pick some stocks here that we can look at that I'm paying attention to here. And if you guys have any good ones, you can mention it in the chat. Why does DBB only have one stock in the list? I find that hard to imagine. DBB has to be made of more than one stock. I'll look that up a little later, but let's take a look at some stocks here. Let's start with one of my favorites, FCX. This is one of the big copper stocks, Freeport McMoran. And if we look at here, look at this thing. It was sitting at the March low at 5, and it is up to 42 right now. And if we look at here, it's nearing its all-time high from 2008. This is what I was talking about here when I talked about, not only was it a real estate boom, it was a base metals boom. And we can see here, it made a 2001 low at about 3, and it made an all-time high at 62, and we're sitting at 42 right now. So we still have about 20 points before it hits its 2008 all-time high. So a lot of room to go here with FCX. And what I like about it right now, obviously we can look at these long-term charts, but what do we do right now? I think a setup is triggering here. We've had a healthy pullback over the last month, some consolidation here, and looks ready to make a move here. We know the market, if it starts to run, I think FCX will beat the market. So we've got FCX, US Steel, obviously one of the big ones as well. Here also has been very strong. CLF is a good one. You can research your metals. There's a bunch of them here that we're following. WOR, SCCO, which has been lagging a little bit, but has trended very nicely through the post-pandemic kind of market here. So those are some good base metals we can be watching. NUE as well, which is related to mining, and look how strong that is. Vale as well here, very strong. And now we've got the industrial metals. Now let's look at some kind of transport or moving that stuff around. Caterpillar here. We tend to think Caterpillar is a slow, big company. It's a 500 million float, but look at how this thing has been moving. This looks like Apple or Amazon here, actually stronger than those stocks right now. So Caterpillar here, very strong. We have John Deere. Also, it's been pulling back a little bit here, but look at this trend. And of course, the industrials, tractors, all that kind of stuff, heavy construction machinery. So definitely be paying attention to this area, probably the most important area right now because of all the infrastructure talk. So that is one area we should be paying attention to. The next is energy. First of all, we always look at oil here. Oil has been strong since November. Look at this run, now consolidating, ready to break out. And then XLE here, which is energy related stocks. And you can see a bunch of the different oil companies that make up this ETF. This also has been very strong. And when we get to current positions, you will see that we have an energy position right now. Definitely an area to be paying attention to. Let's just pull up a few different stocks here. Oxy is lower float. Actually not low float, but oil and exploration stock. We can see here a very nice pattern here. It has gone from 8 to 25. Pre-pandemic was sitting at 47. So a lot of room to the upside and about to remount the 50-day moving average. Actually just did. NOV related to equipment. Also very strong chart here. And of course we have the Chevrons, BPs also looking good. We're seeing some accumulation coming in, some good volume coming into these areas. There's a ton of oil stocks. We could pull up about 50 different stocks. they're all pretty much putting in this pattern right here. So energy, definitely an area to be paying attention to. Sal was talking about nail, which is related to housing. Let's just pull that one up here for Sal. Has been a strong area, pulling back more recently, and we'll see here. It was very extended. Is it going to pull back more to the 200-day moving average? I've actually been getting a little more cautious with home builders, but we'll see. If it holds that 50-day moving average and starts to trend, it's back on its uptrend. All right, number 3. So we talked about energy, we talked about infrastructure, 2 areas to really be watching over summer. Oil sometimes makes really big moves over summer. So that's also a seasonality play. At-home stocks. So we know we're coming out of a pandemic. Everyone was at home for a long time. What have we been using, and what stocks have been on fire since March 2020? One, what we're using right now, Zoom has been on fire. Peloton for working out at home. TDoc for a senior doctor at home. Netflix, Roku for watching TV at home. Anything related to at home was on fire 2020 to 2021. Now, what is happening with these stocks now that a lot of people are getting vaccines, the economy's opening up, COVID numbers are the best they've been. So reopening of the economy, how does that impact the at-home stocks? So if we look at Zoom, we can see here, lagging. I mean, just take a look at FCX. An industrial metal is moving like a tech stock, on fire, at highs. You know, since November here has gone from 20 to 42% move since November. What is Zoom? The stock that everybody was trading in 2020, done since November. While FCX has gone up 100%, Zoom has gone from about 600 to 330. So while infrastructure plays have gone up 50 to 100%, at-home stocks like Zoom have gone down 40 to 50%. So Zoom made its high in November and has just been in a downtrend ever since. We are seeing lower lows. Every low has been a lower low. You know, when we're looking at healthy pullbacks for continuation plays, we want to see that pullback make a higher low. But this has been making lower lows, and then the highs have been making lower highs as well. So until this changes, until we get lower highs or higher lows and higher highs, the trend is still downtrend. And this actually looks like it might be a topping pattern. And we could start going all the way down to, you know, even down to like 120, which would still be way off its lows here at 62. But a lot of room to the downside for Zoom. Let's pull up Peloton. And we can see here what happens now that people are going back to the gym. Peloton has gone from 171, made a low here of 88, and testing the 200-day moving average. So we'll see if it gets back on trend, or is it going to fail here and go back to a downtrend. TDoc has been the worst of the bunch. You can see here, this really does look like a topping pattern, and look at all this negative volume in the stock. Netflix, while not breaking down, has been lagging the other FANG stocks and is below its 200-day moving average, when most of the FANG is above their 200-day moving averages. So, you know, compare Netflix to, say, Facebook, which is very strong. Compare it to Google, which is very strong. So as you can see here, the play for 2020, which was at home, looks to be topping, or at least lagging in 2021. So at-home stocks are actually good potential shorts, even in a strong market. And I say potential shorts, you got to watch the chart. If they reverse along, and I'd be more cautious shorting something like Netflix than I would something like Zoom or TDoc. All right, so that's at home. Skip travel stocks here. Let's get to travel. Let's start with airlines. Jets, fantastic chart pattern. You can see here the bottoming formation in March, and ever since then has been going higher. We have a big kind of long-term cup and handle pattern, and now we're looking for a breakout here. Still a lot of room here. You can see where Jets was pre-pandemic, around 32, and it's sitting at 26 right now. Definitely an area to pay attention to. Let's look at United here. Essentially the same exact chart. Looking good. Has just remounted his 50-day moving average. Southwest Airlines has been showing relative strength. Fantastic pattern. It is actually above its pre-pandemic levels. JetBlue also looks very strong. So airlines should definitely be on your radar. And then we have the cruise lines here, RCL and CCL. I forgot which one, but one of them was just authorized, I think, to start taking on more passengers. But also looking very good. And it must be RCL because RCL is showing relative strength to CCL. So we have cruise, we have airlines. We could throw in hotels also. Look at Marriott, improved chart. Hilton here, also improved chart. So anything related to travel, opening up of the economy, where we book our stuff like Expedia, also very strong EXPE. Look at that, fantastic chart. So definitely be paying attention to these areas. Finally, let's just look at the FANG real quick. So Facebook, strong chart. Google, strong chart. What we're going to see here is communications is leading. So Google, Facebook related to communications. Of course, Netflix is lagging. Amazon is lagging here. And then what's the other one? Apple is lagging. It's okay, lagging as well. We're actually in Apple. And since we're looking at Apple, let's go to our current bulls alerts. I told you we've been cautious. We're only in 4 positions. The one that is lagging right now is Apple. It's about a point, I believe, under our entry. We were looking for a breakout of the 50-day moving average. That hasn't happened. So, hopefully next week now we can get some improvement here. But the overall chart is still pretty good. We are at a lower or a higher low. Obviously, we don't want to break down below the 200-day moving average. If that happens, I would get out of it. And then we have Twitter. Twitter has been putting in a great chart, had fantastic breakout here, gapped down on earnings, even though they had record revenues. Whenever I see that, whenever I see a strong stock overreact to earnings, I look for a potential reversal, and that has worked out fantastic here with Twitter. We got in the 54s. It's up to 58. We are targeting the 200-day moving average, so a couple of points to go, and then we'll look to take our profits. And if it remounts the 50-day moving average, I would look to get back in. We have Adobe, which has been very strong as well. We traded this as a breakout pullback play when it was remounting the moving averages here. I think we entered around 484. It's up to 504, hit 510 earlier in the day. And we are looking to take profits near the recent highs here. So Adobe has been fantastic. Twitter's been fantastic. ERX, talked about energy. I love energy. This is a longer term trend play that I'm willing to hold for a while. You can see here a lot of room to the upside. I think we get way up here at around 50, which is the open gap here, but hasn't moved much since our entry. It's right around our entry right now. So that's what we're in here. I may look to get more aggressive next week, depending on what we see, but we've been trading very cautiously, this last half of May. All right, guys, that's what I wanted to talk about today. Questions here, you can mention them in the chat. And remember, guys, you guys attend these Stocks with Coffee. If you're a Swing Report member, speaking of which, if you want more, you can join the Swing Report daily report video. We have a full class in here. I put our report out every day, and of course the alerts as well. And then we do mentorship sessions. We've done 44 so far, which are like mini classes. So check that out if you want to join that. And of course, if you attend these Stocks with Coffees, if you pay attention to anything Bulls related, you're part of the Bulls family, contact me or anyone else anytime. Old school email here, singhjd1@aol.com. I'll get back to you within a day or two. And of course, follow me on Twitter, Paul J. Singh, the real Paul J. Singh on Instagram. Put out videos every day, stock analysis, chart analysis, little videos and stories going on in the market. Of course, Bulls on Wall Street, my own website, pauljsingh.com, more mental game related. And then if you guys have any questions or anything you want to talk about, email me anytime. All right, guys, thanks for joining me on Saturday here. Have a fantastic Memorial Day weekend. Get out and do some grilling, do some traveling, and I will see you guys in 2 weeks for the next Coffee with Paul. And then next weekend, I will do the weekly swing trade report. All right, guys, talk soon.